Infrastructure of a country is the key to its development and overall expansion of an economy, as it entails both manufacturing and industrial growth. It is the infrastructure of the country that distinguishes it from developing economy to a developed one. The main components of infrastructure in India are water, power, transportation, and communication. Like any other sector, infrastructure also observes some challenges and hindrances in its development. Firstly, proper implementation of the schemes and proper allocation of resources to fulfill our development goals is still something which India lacks today. Despite construction market booming today, there are still certain challenges India faced during COVID and might face ahead in ensuring availability of construction materials and machineries, timely completion of projects, availability of trained human resources, and addressing concerns on roads, bridges, congestions, and safety. Secondly, despite efforts to diversify the alternatives, coal remains the country's dominant source of power, which is getting scarce day by day. Hence, inadequate electricity generation makes it difficult to support the country's 7 to 8% annual economic growth rate. Shortage of input and poor performance of state electricity boards are some of the other factors. If we talk about software infrastructure like BFSI, healthcare, etc., during COVID, the demand was high, but the corruption in both these sectors were at peak too. Increase in NPAs, corruption in medicinal sectors, closure of tourism, etc., resulted in dip in infrastructure development during COVID. Realizing the dream to become a $5 trillion economy by 2025 can be landmark achievement in India's journey so far, so analyzing its growth prospects become crucial. Let's start understanding the sector with overview of its market. After an almost 19% and 13% increase in May and June 2022 respectively, India's infrastructure flagged the second month of double-digit economic expansion. While the production of crude oil decreased, the other commodities saw increases in production, as we can observe in this graph. Moving on to the profitability, investors are optimistic on the Indian infrastructure industry and appear confident in long-term growth rates, as the industry is trading at a price-to-earnings ratio that is higher than its 3-year average. The earnings for companies in the infrastructure industry have remained mostly flat over the last 3 years. Diving deeper into the same, Coal India Limited, a Maharathan company, belongs to mining, minerals and metal industry. Being a market leader in this industry, it contributes a major portion in infrastructure development. It has a market capitalization of a whopping 1,31,235 crore. Investors are optimistic as the ROE over 3 years have been 43.6 and ROCE of March 2023 is 54%, with net profit at 29,312 crore, with a CARG of around 17% over 3 years. During the Maritime India Summit in March 2021, Prime Minister Narendra Modi announced that 574 port projects will be developed on India's 7,500-kilometer coastline by 2035. But if the projects are not completed on time, the purpose for developing them will not be fulfilled. Various companies from Japan, US, Israel, and UAE are contributing to infrastructure development of India, but the delays are affecting India's business relations with these countries, thereby creating its negative image in international platform. Now, this brings our focus towards logistics in India. Around 71% of goods are shipped by road, only 17.5% by rail, and a small segment of trade is done through waterways. India lacks the infrastructure to seamlessly load-unload goods from truck to train, thereby impacting further associated activities, not only the complexity of supply chain system, but also the factors like red tapeism in bureaucracy, legal issues, delay in land acquisitions, green clearances, social issues like protesters damaging the projects causes delay. Recently, India's Road Transport and Highway Minister Mr. Nitin Gadkari requested fast disposal of cases of contracts and finances related to infrastructure. National Logistics Policy 2022 is expected to revolutionize the entire logistic industry of India, including even air logistics. The goal is to lower the cost of logistics from its current 14% of GDP to less than 10% by 2022. The key areas it focuses on are re-engineering, digitization, and multimodal transport under Mission Gati Shakti. Since infrastructure holds great importance in the economy, the government naturally participates in the sector. Let's take a look at the government's recent involvements in infrastructure. The government has allocated Rs 10 lakh crores to improve the infrastructure sector and started several projects for giving it a significant boost. Over the next 3 years with PM Gati Shakti, cargo terminals for multimodal logistics facilities will be built along with 2 lakh kilometers of national highways, which is going to boost up supply chain management system in India. Moreover, India plans to spend $1.4 trillion on infrastructure projects through the National Infrastructure Pipeline from 2019 to 2023 to ensure sustainable development. So far, the infrastructure industry looks pretty attractive. So let's talk about some of its growth prospects. Construction output in India reached an all-time high of 62.6% in April of 2021 and has remained consistent over the years other than the low record of minus 37.9% in April of 2020. India power market is expected to have CAGR of more than 3% during the forecast period of 2022 to 2027, taking base year as 2021, when we compare the after effects of COVID. Despite pandemic, demand for power and electricity remains stable as it is as essential as water. India being second populous country and the degree of urbanization taking place are some of the factors for its growth. Digital infrastructure has also emerged as an equally or arguably a more significant infrastructure necessity as compared to the traditional one after COVID-19 pandemic. One of the major opportunities of growth of the infrastructure is FDIs. For example, Saudi Arabia is looking to make investments in India potentially worth $100 billion in the areas of energy, refining, petrochemical, infrastructure, agriculture, minerals and mining. The market is fragmented and its market is expected to grow at CAGR of approximately 7% over the next 5 years due to the inflow of FDIs in the infrastructure sector, and the government has allocated 100 lakh crore in infrastructure along with many other factors driving the market. So to conclude with analysis, the final thoughts that comes out are that although the rate of change in infrastructure has not yet been as rapid as in some other sectors, this is starting to change, and the change will be both significant and unstoppable with influxes of funds and new projects. In the long-term viewpoint, the globalization, development projects, FDIs and government support, the infrastructure industry will observe consistent growth as it has been for past years.